Hello, my name is Chester Johnson. I'm the co-founder of the Stock Boss Up app, and today I'm here with Bob Wynn. He is the founder of ClimbUSA.org, and today he's going to talk to us about stock selection guide and his organization. Bob, thanks for joining me today.
Thanks very much, Chester. It's nice to be here.
So today, in terms of helping people learn about investing and get into investment clubs, I was hoping we could teach people about stock selection guides. And the first question I have for you is, what is a stock selection guide?
Well, the title actually describes what it is. It is a guide that helps you to select stocks. I like to explain that stocks are sort of like people. There are a lot of them. Some are good and some are not so good. We certainly have discerned our own methodology for determining when we think a person is good based upon the metrics that we set in terms of a person being polite and intelligent and respectful, etc. Stocks, we have our metrics for that too. And it's very, very simple because it boils down to what I tell our eighth grade Klein youth leaders, that sales drives earnings and earnings drives the stock price. Therefore, if we're ultimately looking for an increase in the stock price in those companies that we buy, because the other mantra that we want to hold in our heads, buy low and sell high. So if it is earnings that drives the stock price and it's sales that drives the earnings, then the stock selection guide takes us into an in-depth analysis of the historical sales trends of companies, and in turn looks at the earnings that are derived from those sales. And it's those that have the consistent upward trends that are manifest through our stock selection guide analysis process.
People talk about all sorts of different strategies to make a stock choice. There's momentum, there's technical analysis, there's value investing. Why should a new investor try the stock selection guide out?
Well, like you say, there's so many what I call fancy schmancy approaches to investing. And again, working with a lot of young people, I use the sports analogy. And I tell them that any coach that's worth their salt is not going to teach you the alley-oop before they've taught you the layup. And the stock selection guide keeps you in the lane of the basic fundamentals, and it does track the main trend of methodology that's called fundamental analysis, which is what I think is the layup level of learning about stock investing. I think it's ill-advised to try to learn too much too quickly or go too fast prematurely. It's really important to nail down the fundamentals of how to analyze companies before you get into more sophisticated analytical methodology.
What a great analogy. I'm going to use that analogy all the time now. And I want you to know, I actually have played basketball for about 20 years now. And every time before I play a game of basketball, I will do 5 layups, right hand, left hand, to
Yes.
make sure I got my fundamentals still in check.
That's about as far as I got, is learning how to do a good layup. I don't know if I've ever done an alley-oop in my life.
Oh man, that's awesome. So if someone starts a stock selection guide, what are the basic, from a top level, what are the basic steps that you take when doing a stock selection guide?
So that's a pretty loaded question, and it's a little bit of the reason why Klein USA complements better investing, because there are some basics that I think people should go through, even perhaps before they try to engage in a stock selection guide. Number one, there's just some terminology relating to business, just like there's terminology relating to sports or any other discipline that you're going to have to learn and be a little bit familiar with so that you can then grapple with the tools of the stock selection guide. So one is for people to get very familiar with terminology. You can use Investopedia, Khan Academy, and there are some terminology presentations that Better Investing offers as well. And the other is to learn a little bit about data sources because the stock selection guide is predicated on data feeds. That is some real-time information that comes in about the current trends in stocks and their earnings and so on. And so I think it's important that people be at least remotely acquainted with both the periodical data feeds such as Value Line and or Morningstar, and then some of the online sources such as Yahoo Finance, and just get familiar with how to navigate around those and what some of the benchmarks are that those data sets present. And then when they go to learn the stock selection guide, and when certain terminology is used or data sources are referenced, these individuals will have a little bit more background and prior knowledge that will allow them to learn what the stock selection guide has to teach.
Good, good. Well, finally, you talked briefly about Climb USA. Could you tell us a little bit about Climb USA and how it complements the process of stock selection?
Sure. Historically, Better Investing has worked a lot with the adult population. When I learned about investing, especially the power of compounding, I thought it was imperative that we begin to acquaint younger people with the process of investing and to help them to understand why it's so important that they grasp the understanding and put it into practice at an earlier age. In learning about the stock selection guide and investing, you'll learn that there's a strict correlation between the rate of return and the time in which you can double your money. And if you think about the fact that in our lifespan, we only have a finite number of times that we can double our money, especially if we're assuming a rate of return of as high as 15%, which is as high as you should ever assume. It's going to mean that you can only double your money every 5 years. The whole idea is that you're going to just have a finite amount of time to double your money. And I do use easy math examples so that if you're living to be 100, you'd have no more than 20 times to double your money at a high rate of return. You can think that 20 would be the maximum number of times. But if you are more realistic, it's probably going to be more like 15 at the most. Therefore, think about those last two doubles. That's what I tell people to think about. So if you are 65 years old and you have $250,000, then at 70, you'll have ideally 500,000. And then maybe at 75, you could have $1 million. But just imagine if at 65 years old, you've got $1 million. Then by the time you're 70, you have 2 million. And my goodness, by the time you're 75, you have 4 million. So it's all about those last couple. Where are you when you only have 2 more doubles left? And therefore, the earlier you get started, the better off you can be in the end. This is all assuming the health of our economy. And that's why it's so important to listen in on what's going on with geopolitics and the global economic data, because our companies that we're investing in are going to do no better than the global economy as a whole. And assuming that the economy continues to grow around the globe, there would be opportunities for companies to grow in turn. And if you're an investor in those companies, then you have the opportunity as well. So Climb is really dedicated toward reaching youth and reaching those adults who serve youth, especially those that come from historically underserved population groups, and getting people oriented toward what we call the economic way of thinking, which includes investing, but it also includes understanding the lifestyle of successful careerists as well.
So, Bob, Wynn, thank you so much for talking with me today. If you want to see more and learn more about Climb USA, you can check out climbusa.org. If you want to learn more about the Stock Selection Guide, check out betterinvesting.org. And if you want to find really great stock ideas and great financial literacy, check out stockbossup.com. Bob, thank you again.
Thank you very much. Appreciate it.
I was at the Better Investing conference last year, and they surprised you with the new award that they had created on your behalf. I was just hoping you could briefly talk about that and share what it was.
Sure. Like you say, it was a total surprise, and they created a special award category that was named the Robert Wynn Better Investing Club Leadership Award. Basically, it's a recognition for the 2.5 decades of effort that I've put forth in trying to help create investment clubs. I got my start in investing through an investment club in 1987 is when I started. And our club immediately joined Better Investing. And through that process, a lot of knowledge and understanding was gained by all of the members, including myself. And I was really smitten by just how interesting and lucrative investing can be. And I just went on a tear to try to get more and more people involved with investment clubs. And I guess Better Investing was noticing some of the efforts along the way.
Nice. I was very impressed when I was there and I saw that happen. I was so happy for you to get the award. And as I told you afterwards, I have a secret long-term goal to get the Bob Wynn Award myself.
Well, I hope that you're successful, because that will mean a lot of people will have been helped along the way.
Absolutely. Absolutely.
So if you live to be 100, then that's only going to be what, 5, 10, let's say 50. And basically, if 5 into 100 goes 10, is it only 10? It's got to be more than that. Okay, you got to cut this apart. 5 into 100 goes
20.
20. Okay. My man, it's been so funny. Whenever I'm standing up like at the board and I'm talking, and when it comes to talking and doing math, I cannot do both at the same time. That's the other thing I know about myself. But anyway,